The all-time high in 79 was 6. The average price for a year was 300% higher than the all-time high year later, a high price. Well, it didn't stay at 50, but it stayed at over 300% higher for the year. So that's something to bear in mind. Could that happen again? I would absolutely suggest it will. So does it go to 150 and then settles at 50 and stays there? I don't know. I mean, it's so undervalued. Anyway, I won't carry on further, but that's a point that not very many people make.
Metal market analysts suggest that silver prices are poised for an explosive rise in 2024 if global supplies continue to fall short of demand, and if the Federal Reserve follows through on its plans to pivot to interest rate cuts in the coming months. DavidMorgan, a highly regarded analyst in the precious metals sector, anticipates silver price targets reaching up to $150. He emphasizes silver's undervaluation and its potential for substantial gains, especially during periods of high inflation. Drawing from Professor Roy Jastram analysis, he notes silver's historical resilience compared to other assets. For instance, during the inflationary years of the late 1970s, gold prices skyrocketed. Similarly, when inflation surged in the early 1980s, silver prices followed suit. This pattern is not coincidental. These precious metals are known as inflation hedges for a reason. They have an intrinsic value that doesn't erode in the face of inflation. Meanwhile, David suggests that current stagnant silver prices could be misleading, similar to past situations. Despite investor frustration over its sideways movement, he sees this as potentially signaling a forthcoming significant price rally. Over the last month, silver has quietly charted a gain of nearly 12%, once again outperforming gold. But silver still has plenty of sky above it. Even as gold set a new record, the white metal remains about $5 below its 2020 high and $25 an ounce below its record. Anticipating a potential period of consolidation followed by an upward trajectory, David sets his sights on the gold price target of $2,300 for the year ahead. He points out the cautious sentiment in the gold market, noting recent upticks in futures contracts despite stagnant movement elsewhere. Gold futures settled at the highest level ever on Monday, as traders bet the Federal Reserve will start cutting interest rates in the second half of the year. The gold contract for April gained $30.60, or 1.46%, to settle at $2,126.30 per ounce, the highest level dating back to the contract's creation in 1974. Now we present the clips of DavidMorgan's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I am a believer in Professor Jastram's silver and the restless metal. He makes a hard case that nothing does anything close to silver in a high inflationary environment. Of course, now we've got cryptocurrencies. It didn't exist when he wrote the book. So, I'm cognizant of that. Doesn't mean it's going to be this time. The point I'm making is this: back in the 70s, we had very high inflation. For quite some time, silver didn't react. And I've forgotten that. And then it actually went up and started to participate. Then it fell back off. And then it went ballistic. So having that in mind with the last market, they don't repeat, but they rhyme, is maybe we're in that kind of a situation where every one of us silver bulls go, what the heck is going on? And maybe it's a repeat of what happened in 74 to 1980, where silver's faking everyone out. Everyone knows fundamentally it should be going up. It's going sideways or staying in the trading range. We're all about ready to give up like we are right now. And then it just goes and goes and goes. So that's what I wanted to add. Just never sell a quiet market and climbing the wall of worry. So everyone's kind of looking at, is it real or is it a fake out again? Then the last 3 or 4 days of trading, there's been 60,000 contracts added to the gold futures market. That's a 15% increase in 3 days. That's a phenomenal increase percentage-wise. Secondly, there's really no movement into the gold ETFs. And lastly, I spoke with a large wholesaler and a fund manager yesterday. And the retail side and the wholesale side is basically static. There's no one. So I think everyone's doing as Peter said, or you said, Ronnie's saying, so good, so far so good. Because this is the time when no one believes it. The boy who cried wolf. I've heard that too many times. I don't believe it this time. And then the market does start to move. I don't believe it. I've seen this too many times, and wait on the sidelines, wait on the sidelines. You get enough momentum, then all of a sudden people get FOMO and go, gosh, darn it, I better get in. So hard to say. My call right now is I'm the boy who cried wolf, or I'm on that side. I'm leaning toward a consolidation here, maybe a pullback, and everybody says, aha, see, I told you so. I'm right. There we go. I'm going to wait for gold to get under 2000 or get to 2000 and I'll make up a number 50. That's my buy point. And then it just goes sideways for a few days and then it goes up, 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 up. That could happen. I'm not saying it will happen, but these markets are tricky. I've been in them most of my life, and to predict them is very difficult, but we know that we're making a new high. That's a fact. And because we have that fact, we know that what the future holds. The last comment is Citibank came out and they raised their target price from 2150, which we're at, to 2300, which is pretty close to what the Morgan report said. I said we'd be between 2300, possibly 2500 this year, barring, I'm sorry, Jesse, I have to always say it, the black swan. I mean, if something happens in the banking system or a big brokerage house or a non-delivery or one of 10 things that could take place and have a probability of taking place, then you could get into a lock limit up. You could go limit up 3 days in a row and lock the gold market down for a couple of days to let things cool off. Will that happen? Well, first of all, there's a very slight possibility it could. Will it? I doubt it, but you cannot rule it out because the markets really are so precarious right now. Nothing makes sense anywhere across the board other than the precious metals do hedge all of the currencies, the bonds, and the stocks. So if you don't have a metals position, you're really not a true investor or a seasoned investor. There's nothing that works in times of distress more than a precious metals.
During the interview, DavidMorgan stated that institutional investment demand could be stifled and speculates on potential scenarios where entities or nations may turn to silver investments due to dissatisfaction with traditional banking systems. Silver demand is expected to decrease by approximately 10% to 1.14 billion ounces. However, the Silver Institute reports that total demand remains historically high, ranking as the second highest level on record. Industrial silver demand is projected to rise by 8% to a record 632 million ounces. According to the Silver Institute, investment in photovoltaics, power grid and 5G networks, growth in consumer electronics, and rising vehicle production all help drive industrial demand higher. Let's get back to the interview.
Silver in 1979 hit $6. That was an all-time high. A year later, it hit $50, went up 850% in 1 year. That was an intraday, one-day high. We all talk about $50 silver, but we don't really elucidate that it was a one-day deal. However, when it came back down and settled, the year-long average price for silver in 1980 was $20 an ounce. Think about that. The all-time high in 79 was $6. The average price for a year was 300% higher than the all-time high a year later. And I want to put that out in the consciousness of everybody because what you just said, Jesse, well, will it stay at a high price? Well, it didn't stay at 50, but it stayed at over 300% higher for the year. So that's something to bear in mind. Could that happen again? I would absolutely suggest it will. So does it go to 150 and then settles at 50 and stays there? I don't know. I mean, it's so undervalued. Anyway, I won't carry on further, but that's a point that not very many people make. Look at the investment side of silver where maybe we're draining the stockpile to meet the physical demand by industry. Is there as much there as there is on paper? I suggest highly that there is not. The other part is what I talked about earlier about why isn't there any investment demand through the institutional side? Is it because someone whispered in somebody there? I mean, that does sound like a conspiracy, and I fully admit that. But let's say that is the case as a thought experiment. There's going to be others out there in sovereign wealth funds, family offices, a rogue nation state. Somebody that's gotten burned by the New York and London, the Anglo-American banking empire said enough is enough. I'm buying silver for investment purposes. What if somebody puts it back into circulation as a monetary asset, like it's being done with a couple of the cryptocurrencies I can name? So there's a lot in silver's favor. It just looks so bad right now, price-wise. But as Peter's done a great job, and I've tried to, put forward, there is so many things about this market that if you are an ultra conservative, remember, conservative conserves. Conservative is someone that cares about the environment. They only cut down the amount of trees that you need. They only dig as much minerals out of the earth that you need. They conserve. So anyway, an ultra conservative would say, well, if the best miners in the world that mine silver can only get out of the ground for roughly $25 an ounce, and I can buy it for that with the premium or close to it, I'm becoming one of the best silver miners in the world. And I don't have the hassle of, negotiating with the EPA and doing a study and doing a preliminary economic assessment and getting a bank loan and all the stuff that goes into mining. All I got to do is put it into my house or my office or find a storage facility that's legit. And I'll become one of the best silver miners in the world. Anytime you can buy a commodity under the cost of production and have some patience, you basically can't lose. Now, I can't guarantee that, but that's always been the case in the past. So, I know I sound like a broken record. I know it sounds too good to be true. I know people are burnt out. And again, those are the places where markets really usually start. And everybody that's on board, some get off board, just say, oh, it's not real this time. And then it just goes. That's what happened in 2011. I mean, things just started to go and go and go. And people go, oh, it can't go any higher. It does. And that happened in 1980 as well. The problem I see if that occurs again, and it probably will, is what do I do? What does Peter do? I won't speak for Peter, but in my own case, do I really want to sell this precious metal for fiat? Maybe. I'll have to say maybe. I'll leave it there.
A sticky inflation environment accentuates the attractiveness of assets like gold and silver. Investors seeking to hedge against the erosive effects of inflation and the uncertainties surrounding central banks' monetary policies can be appeased by precious metals' historical track record as an effective store of wealth. Along with gold, silver also shows signs of potential gains. Do you believe now is the time to increase your exposure to this precious metal in your investment portfolio? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.